The Architect of the Intelligence Age, a comprehensive investor's guide to NVIDIA, NVDA. As of January 17, 2026, NVIDIA Corporation has moved beyond the realm of traditional technology companies. It is no longer just a chip maker, it has become the fundamental infrastructure provider for the global economy. If the 19th century was built on steel and the 20th on oil, the 21st century is being built on NVIDIA silicon. For an investor today, NVIDIA represents a unique opportunity to own the picks and shovels of the artificial intelligence revolution. However, with a market capitalization that rivals the GDP of major nations, the stakes have never been higher. This guide breaks down the company's business model, its 2026 technological roadmap, and the critical risks you must understand before committing your capital. 1. The business model: more than just hardware. To understand NVIDIA, you must look past the physical chips. NVIDIA doesn't just sell hardware, it sells an integrated ecosystem. The data center, the crown jewel. In 2026, the data center segment accounts for over 85% of NVIDIA's total revenue. This isn't just selling individual GPUs, graphics processing units, to cloud providers like Microsoft or Google. It involves accelerated computing. NVIDIA's chips are designed to do many things at once: parallel processing, which is essential for AI. Networking, Mellanox. AI isn't just one chip, it's thousands of chips talking to each other. NVIDIA's InfiniBand and Spectrum-X Ethernet technologies are the nervous system that connects these chips. Software, CUDA. This is NVIDIA's true moat. CUDA is a software platform that millions of developers use to write AI code. Because this code is written specifically for NVIDIA hardware, switching to a competitor like AMD or Intel is incredibly difficult and expensive, a concept known as developer lock-in. The gaming legacy. While AI is the headline, NVIDIA remains the dominant force in PC gaming. The GeForce RTX series continues to set the standard for prosumers and esports. In 2026, gaming serves as a vital R&D lab for technologies like DLSS4, deep learning supersampling, which uses AI to create high-resolution images in real time. 2. The 2026 technology frontier, Blackwell and Rubin. NVIDIA's dominance is fueled by a relentless one-year product cycle. In early 2026, the company is in the middle of its most significant transition yet, the Blackwell era, B200/GB200. Throughout 2025, the Blackwell architecture became the gold standard for AI training and inference. The GB200 NVL72. This is a rack-scale system that connects 72 Blackwell GPUs into a single massive supercomputer. Performance. It offers up to 30 times the performance for AI inference, using AI, compared to the previous H100 generation, while significantly reducing power consumption. The Rubin announcement. At the start of 2026, CEO Jensen Huang unveiled the next generation, the Vera Rubin architecture. HBM4 memory. Rubin will utilize the next generation of high-bandwidth memory, HBM4, allowing for even faster data processing. Focus on efficiency. As global power grids struggle to keep up with AI data centers, Rubin is designed with a performance per watt priority, making it more attractive to countries and companies with strict energy regulations. 3. Sovereign AI, the new revenue stream. In 2026, a new term has entered the investor lexicon: sovereign AI. Nations like Japan, Saudi Arabia, France, and the UK have realized that AI computing power is a matter of national security. Instead of relying on American cloud companies, these countries are building their own AI factories using NVIDIA hardware. Market impact. This segment contributed over $20 billion to NVIDIA's revenue in the past fiscal year. Stability. Unlike hyperscale tech companies that might pause spending, government-backed sovereign projects tend to be long-term and less sensitive to short-term market fluctuations. 4. Financial health. By the numbers. January 2026. NVIDIA's financial performance remains record-breaking, though the growth rates have naturally started to normalize from the triple-digit surges seen in 2023. Key metrics. As of January 17, 2026. Stock price, approximately $187.82, post-split and recent volatility. Quarterly revenue, reaching a record $57 billion in the most recent quarter. Gross margins, hovering near 75%. This means for every $100 NVIDIA sells, it keeps $75 before accounting for operating costs, an unheard of level of profitability for a hardware company. Cash position. NVIDIA is sitting on over $60 billion in cash, which it is using for massive stock buybacks and strategic investments in AI startups. 5. Critical risks, the anti-NVIDIA case. No investment is a sure thing. If you buy NVIDIA today, you must accept these 3 major risks. 1. Customer concentration. A small group of companies, Microsoft, Meta, Google, and Amazon, account for nearly half of NVIDIA's data center revenue. If these hyperscalers decide they have enough capacity, or if they successfully transition to their own internal homegrown chips, NVIDIA's growth could hit a wall. 2. Geopolitical and supply chain fragility. NVIDIA doesn't own its own factories. It relies entirely on TSMC, Taiwan Semiconductor, to build its chips. Taiwan risk. Any conflict or blockade in the Taiwan Strait would effectively stop NVIDIA's production overnight. Export controls. The US government has placed strict limits on what NVIDIA can sell to China. China was once a massive market for NVIDIA. Today, it is a regulatory minefield where the company must sell downgraded versions of its chips. 3. Antitrust and regulatory scrutiny. In late 2025 and early 2026, antitrust authorities in the US, EU, and France escalated their investigations in NVIDIA. The concern: regulators are worried that NVIDIA is using its dominance to lock in customers or penalize those who try to use competitor chips. A forced breakup or change in business practices could damage the company's high profit margins. 6. The competition. The challengers arrive. While NVIDIA is the king, the castle is being stormed by two types of competitors: merchant silicon, AMD and Intel. AMD's MI400 series and Intel's Gaudi 3 are being marketed as open and cheaper alternatives. While they lack NVIDIA's software ecosystem, they are gaining ground with cost-conscious enterprises. Internal silicon. Big tech companies like Amazon with Trainium and Google with TPUs are building their own chips. While they still buy NVIDIA chips today, their goal is to become self-sufficient over the next decade. 6. Investor strategy. How to approach NVIDIA in 2026. If you are looking to start an investment in NVIDIA today, consider these professional approaches. The wait for the dip strategy. NVIDIA is a high volatility stock. It often sees 10 to 20% pullbacks based on headlines. Many investors avoid buying at all-time highs and wait for these corrections. The index alternative. If you are worried about the specific risks of one company, you can invest in semiconductor ETFs, like SOXX or SMH. These funds own NVIDIA, but also own the companies that help build its chips, providing more diversification. Dollar cost averaging. Given the stock price is more accessible following the 10-for-1 split in 2024, buying a set dollar amount every month allows you to buy more shares when the price is low and fewer when it is high. Conclusion. The pulse of the Industrial Revolution. NVIDIA in 2026 is the most influential company of the decade. It is the gatekeeper of AI, the leader of sovereign computing, and the most profitable hardware business in history. The verdict: if you believe that AI is a permanent shift in how humans work and live, comparable to the internet or the steam engine, NVIDIA is the essential stock for your portfolio. However, you must be prepared for geopolitical drama and intense regulatory scrutiny. It is a high-conviction play that requires a long-term horizon and a stomach for significant price swings.